In this video, I will explain how I pick stocks as a French investor. You may tell by the accent, I like cheese, I like wine. I'm a French guy and I've been investing in the stock market for almost a decade. And I have achieved a performance of 25% with this technique. So all the companies I invest in are, let's say, mostly are US based, US companies, but you can use some French characteristics to your investment style. Let me just dive in and show you the example with LVMH here. The first thing we want to check, us French investors, is the stability. We won't focus on IPOs, for example, risky businesses, growth investing at a high price, unprofitable businesses. The way I look at businesses, the way I see investing is I want to partner up with great businesses, great management that have a long runway in the future, and it turns out that you can buy them at a cheap price. That's the perfect situation. So you can totally dismiss businesses that don't grow. You can totally dismiss businesses without any track record. We can totally dismiss companies that burn cash every year, that are not profitable. You want stability, you want steady returns, and you want a great management with incentives, maybe a family-owned business. LVMH is a good example of this. They have been in business for decades. They have a great management. Now we have Bernard Arnault, our richest person in our country, that is leading LVMH. He has delayed his retirement to continue being the CEO of this company. Great assets, they are everywhere. Everybody knows Louis Vuitton. They have a big brand all over the world, and they are managed conservatively without a lot of debt. They have a lot of cash. They have great revenue growth, net income growth, free cash flow growth. They are now trading at a PE ratio of 25. This is definitely the kind of an investment that any French guy will love. This is a kind of investment I like a lot. Another example of stability, longevity of returns is Hermes. Hermes has been here for centuries. They make a lot of diversified products. It's the high-end luxury of luxury. They sell very expensive bags. This is the quiet luxury culture. And now the stock is expensive, but it was not always the case. I mean, sometimes you could buy them at a normal price. These two companies are profitable, have a long runway in the future. They have been well managed by family. They give dividends. They do some buybacks here and there. The family owns almost everything in the company. The float is not that big, and they grow revenue. They have their brands. It's not speculative. You see, this is not at all speculative. If you buy Hermes stock right now and you hold for 20 years, you will be fine. You will be fine. They have been here since 18. This is in French. My website is in French. Sorry, maybe I can translate it in English. Yes, date of foundation 1837 in Paris. So I don't think Hermes will collapse in 20 years. 30 years or 50 years. This is a business that is unkillable, unbreakable, and this is the reason why it's a great investment. You can't compete with Hermes. They have amazing pricing power, amazing margins. This is phenomenal what they have done. So, first point, stability of returns. We want a long track record and we want safety. So you can dismiss all the bad apples, the fintech businesses, all the industries that are very new, that have not shown the efficiency, profitability, growth in the future. Okay, now let me talk about the debt. We have a culture in France of being conservative. We are risk averse. And I'm using this culture to avoid companies with a lot of debt. If you look at Hermes, not a lot of debt. If you look at LVMH, not a lot of debt. People that watch my YouTube videos know that my favorite business model of all time is TPL, Texas Pacific Lands. If I show you the stock price, you will love it. Obviously, it goes up and to the right, and it was like in 2024, the stock had a gain of 200%, amazing, and they have zero debt. They just have more cash every year. And they have amazing margins. Nobody can disrupt them. They avoid debt. Another investment that I like a lot, that maybe you will not like because the stock is going down, is Evolution. They are in the online gambling casino market that is growing massively. A lot of growth, a lot of profitability, big margins, zero debt. As a French person, I want to avoid bankruptcy. Very hard, very bad. So I want to avoid bankruptcy. And how do you go bankrupt? By debt, with debt. So if you don't have any debt, you can't go bankrupt. And I'm investing in companies that don't have much debt. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. My portfolio is filled with companies without any debt. I mean, I'm also invested in Google. You all know Google, Alphabet, they don't have a lot of debt. I'm also invested in Meta platforms. They don't have a lot of debt. They are cyclical, maybe they have some volatility, but they don't have any debt, which is great. So definitely something I want to avoid. Now, you may say, you are from Europe, you are from French, maybe you love dividends and bad capital allocation. And this is where, this is true. In Europe, people don't have the same financial engineering culture that people have in the US. We are not good at capital allocation. I've been an analyst for small cap, mid caps I've seen them for years. I saw and I talked to management teams in Europe, family-owned businesses that are quite bad. They were quite bad at capital allocation. Their goal was not to create shareholder value. It was to have their market share. That's it. No growth for the shareholders. So they dilute shareholders. They don't do buybacks. They have dividends for their family to have a free salary. And that's it. That's quite bad. And I know we have this bias in France to love dividends. And I want to avoid this because I see the potential of having good capital allocation. If you invest in a company that doesn't do dividends and instead they do buybacks, that will maybe have a better performance as an investor. So I'm using some French characteristics in my investing style, but not necessarily 100%. For the dividends, I hate dividends. It's not tax efficient at all. I'm still in my 20s. I don't want to pay taxes. I want to let my companies grow. I mean, come on, if you are invested in Amazon, you let Andy Jassy and Jeff Bezos work for you. I don't want my money back through dividends. I want my money to compound with Amazon. Come on, guys, do the best work you can. You've been amazing. That's this kind of investment that I like. So, French-wise, dividends, no, frankly, no. No debt. So, no debt, no dividends. Okay. Next one is a preference for established brands with legacy. Yes, basically you want to invest. I want to invest in companies with a moat, with the competitive advantage that was acquired through branding, through competitive edge, better products, better services, a long history. Meta Platforms has this kind of brand. We are 3 billion people using their services. Amazing moat here. Google has a moat because of their brand and their quality of products, services. Amazing. Same thing, Apple has a moat because of their competitive advantage. So you can make a lot of money if you spot these kind of opportunities. Now I believe Apple is too expensive, so I won't buy it at the moment. I don't own Apple right now, but you get my point. Competitive advantages, established brands that create moat. And if you have a moat, you have pricing power. And if you have this brand, you can price up your goods like Hermes is doing it. You can increase the price of your bags and that's it. And you can make more money. And customers will still buy because they buy a Hermes bag. They buy or something with Louis Vuitton bags. You don't really care if the price increases by 10%. You have pricing power. And for a French guy, for a French investor, this is something I love. Another thing is this cultural skepticism towards risk. French investors don't like risk. We are completely risk averse. Most of the population here invest in real estate. Most of my French friends invest in real estate and not in stocks. And yeah, okay, I know. I tried to convince them without much success. Now they copy me on eToro, they copy my portfolio, but real estate is entrenched in the culture. Being patient, holding, and investing in brick and mortar real estate is entrenched in the culture. So we have this skepticism towards risk. And when I mean risk, I mean unprofitable businesses. When they start to become profitable, like turnaround plays, I don't go. IPOs, I don't go. I've been investing for 7-8 years now. I've never invested in an IPO. I just started a couple of months ago. The first IPO I have invested in, and it was a very special situation. So no IPOs, no investment in a startup, unprofitable business model without any track record. We want to avoid risk, and this is the reason we want to invest in large businesses that had a long track record and a long runway. If you look at Amazon right now, the company was founded in the 90s. Look at this. Amazon was founded in 1994, and the runway for Amazon is immense, is huge, because now they can tap into many markets: e-commerce, advertising, software, AI, logistics, streaming, media. They can tap into, it's like a big octopus. They can tap into a lot of growth opportunities, a large growth runway, which I love. So this is the process. In France, we like to have this visibility for a long time. So we want to have this horizon over the next 10 years, 20 years. What will be the destination of our businesses? So one thing that is great if you are French is you don't want to get rich quick. There is no pump and dump scheme in France. We navigate through the market volatility, and we are patient. So the consistency of returns is great. The temperament is great. We are calm. We don't panic. We don't get excited when stocks go up. We like volatility because we can buy more, and something that Warren Buffett praises. This is great. Buying when the stock is going down and being patient about it is exactly what you want as a long-term investor. So pretty proud to be French here. It has given me some cultural advantage to be a long-term investor. If you use the cultural mindset, long-term safety, track record with the value investing principles, Warren Buffett, Charlie Munger, Lilou, Monish Pabrai, you can have this good merger and generate some good returns. So far, the returns are good, and I'm looking forward to seeing the next decade. What will happen in the next decade? So that was it. That was how I invest as a French investor. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.